In my previous life as a corporate lawyer, I worked on deals involving Larry Page, Jeff Bezos, Bill Gates, three of the richest men in the world. You see, I used to work in private equity and venture capital, one of the most elite and secretive areas of investment in the world. What the experience taught me was that the 1% invest in a very different way to you and I. But now, thanks to technology and some innovative startups in this space, it is now possible for you and I to actually access these asset classes for the first time. 10 years ago, imagine you wanted to create an app that connected consumers with restaurants so that you could deliver food to the consumer's doorstep within minutes. To do something like this, you would need to have the right combination of technology, commercial nows, investment, the right team, and ideal go-to-market strategy. This is called a startup company, and investments into such companies is called venture capital investing. Deliveroo, Just Eat, and Uber Eats were just three of the companies who decided to go after this particular market. Now, after a decade, all three of them are publicly listed companies on the stock exchange and collectively worth over $100 billion. So investing in these kind of companies at an early stage would have been incredibly lucrative. And venture capital investing generally, when it goes right, can be incredibly lucrative, and you're talking about 100x plus returns. But it is also a very risky asset class. More on the risks later. Now, imagine you're a pharmacy and you want to buy some medicines in order to sell them at a markup so that you can make more profit. The thing with your business as a pharmacy is it's not the kind of business that is going to have spectacular returns and it's going to go to 100x or 1000x overnight. In short, it is not the sort of business that VC investors would be that interested in. So instead you turn to SME financing. This is Sharia compliant debt financing that you can use the debt to fund your business, and you pay the debt provider somewhere between 10 and 15% per annum, and you are doing this happy because you know that you will take that money and you will grow your business faster as a result of that. This kind of business finance is called SME financing, and it is in contrast to venture capital financing, also called VC financing, because SME financing is based on debt and venture capital financing is based on equity. In venture capital, they will actually take a stake in your business by buying some shares from you. The good news is there are now companies out there that allow you to get access as investors to both the VC world and the SME financing world. But importantly, these investments are on the higher risk, higher growth end of the spectrum. So it's really important to keep that in mind. And often these kind of investments are restricted by regulation to sophisticated and high net worth investors only. In my conversations with financial professionals, they typically say that you should have a minority of your investments in such kind of investments. So think of it like somewhere between 5 and 20% of your overall portfolio should be exposed to these more adventurous investments. Because that way, if things go down south, then at least you don't have too much exposure. But if things go well, then at least you have some skin in the game to benefit from that. When it comes to venture capital, there are two main ways that you can invest in this industry. The first is called IFG.VC. Now, before I go any further, I want to be completely transparent as ever with our viewers, and I should flag that IFG.VC is an Islamic Finance Guru Limited company. But as ever, our coverage will remain completely impartial and we will strive to maintain that. IFG.VC typically invests in one deal a month, pretty early stage companies, and we have invested over £10 million now in over 35 different companies. We regularly co-invest with leading angel investors from across the globe, people like the co-founders of Twitter, Kazoo, Zoopla, Red Bull, Airbnb, and many others. The other option is a crowdfunding project that is being set up by Wahid Invest called Maidan Capital. They are not fully launched yet, but they promise to be bringing high quality deals from emerging markets using the Wahid network. I'm really excited to see them come to market. For SME financing, the main investment option is a company called Gardus. They provide Sharia compliant loans to companies and pretty healthy returns to investors as well. The other really interesting thing about venture capital investing, not SME financing sadly, is that the UK government offers some really beneficial tax schemes because they want to encourage investment into this ecosystem. These schemes are called EIS or SEIS tax schemes. The way they work is that you can get back as a tax rebate up to 50% of the investment amount that you make. So for example, if you invested £10,000, you could get back as a tax rebate within that year up to £5,000. That means that you significantly de-risk your investment by up to 50%. So if these investments are right for you, then you should definitely check them out and take advantage of them if you are a UK taxpayer. Business and entrepreneurship are the lifeblood of our economy. If it wasn't for these kind of innovations, then we wouldn't have the cure to COVID-19. We wouldn't have the mobile phones and the internet technology that we see in our day and age. It is literally the technology that moves us forward as a human civilization. As a Muslim, therefore, investing in these kind of asset classes is not just about the returns. Of course, they are really nice, but it's also about the impact that you can have with your money and putting your money to real use and real value for the world.